Hi, it's Dre Griggs of Sitting Wisdom. Today we answer the question, when is the best time to buy stocks? I get this question often where people are like, what, Dre, when is the absolute best time to buy stocks? And while most people will give you some sort of an answer, I'm going to shoot straight with you. As a fiduciary advisor, I don't want to lie and blow smoke up you, so I will just tell you straight. The reality is, in a recession, there is going to be people who will make more money than they've ever made. Ackerman is one of those examples. He had a short, and I'm not telling you to go do a short, but he had a short on the U.S. stock market, and then COVID-19 happened, and I think he turned $16 million into $2.1 billion with a B dollars, to where everybody is losing money, and then there are people who are making the most money that they've ever made in a recession and a down economy. And then the opposite is also true. There could be the absolute best market where it's booming and everybody's making money hand over fist, where you just like put your hand out and money falls in and out of the sky. And there will still be people in that economy that are losing money. And so the question isn't as much of when the best time to invest is, it's what strategy did you put together so that you can win in each of these scenarios. If you have a plan in place, then you're going to be fine. I'm going to go over a couple plans that you may want to set aside. But if you want more hands-on approach, I do invite you to check out the Your First Stocks Challenge. That is a 5-day free investing challenge we put together here at Obsidian Wisdom. And you go to yourfirststocks.com. That is, again, yourfirststocks.com. And you can register for the free 5-day challenge. By the end of it, you will have a stock investment strategy. You will have a portfolio that you will have bought your first stocks in and started building a portfolio. And you'll be well on your way to achieving financial freedom. When it comes to answering the question, when is the best time to invest in the stock market, I often caution people by saying it is not about timing the market. The market is going to have ups and downs. I know some people say buy the dip and do this stuff, but as a fiduciary advisor, I know that I cannot say that without it sounding absolutely ridiculous and me exposing myself to all sorts of liabilities. And you will find that those people are not liable to say that. They can say whatever they want without any consequences. The reality is, as far as timing the market, that is not good financial advice. That you cannot say that as a fiduciary. A CPA probably wouldn't tell you that if they knew about the stocks. I would put a chart up for you, and you will see that if someone was fully invested, where they invested the same amount of money every single month in the stock market, and they were able to implement an investment strategy that worked for them, that they would have, I think this data is showing from 96 to 2016. What does that mean? It means in 1996, I caught the dot-com bubble as it was coming into the 2000s. I caught Y2K. I caught 9/11 in 2001. I got the Great Recession also from 2008. And then I even was able to catch some of the growth after that. So we caught all of these events. And I'm telling you, in that 20-year span, if you kept your money invested, you would have got an 8% return on your investment. And that would have been about $44,000 you can see in the chart. If you missed the best 5 days, that would have dropped to 6%. You would have lost about $15,000 on your return just by missing the best 5 days over a 20-year span. You just missed the best 5 days where you said, you know what, I think the market's going to go down, Dre. I'm going to take my money out. And then when the market goes back up, I'm going to put my money back in. Well, if you missed one of those best days, and mind you, within most of the dips, within 2 weeks, you have your best growth days also. So if you were to take your money out because it was like, oh, well, dang, 9/11, you would have missed the spike that happened afterwards. If you took the money out after the 2008 recession, you would have missed one of the best bull runs in the history of the stock market, right? I mean, we're talking about crazy growth where you were just throwing money at a stock and the stock was growing. All the stocks were growing. You would have missed, like Facebook coming out and Tesla. You would miss all these amazing growth opportunities. And then if you miss the best 10 days, and then mind you, we're still talking about over 20 years, over a 20-year span, if you just missed the best 10 days, your portfolio would drop to 4%. You would have lost half of your overall returns missing the best 10 days of the market. If you missed the best 15 days, now you're at about 3%. If you missed the best 20 days, then you're already at 1.5%. So you basically almost broke even. You haven't even kept up with inflation now to where you only have about a 1.5% return. And you see, if you missed the best month, so we're talking about a span of 20 years, right? 12 months in a year, 20 years. I think that means that we're talking about like 240 months. If you miss just 1 month out of those 240 months, then you will find that you lost money. from 1996 to 2016, if you missed 1 month out of the 240 months that your money would have been invested, over the best 30 days, then you lost money. And we're not even talking about the fact that you lost money with inflation. We're not talking about the opportunity cost of all these great companies that have been growing around you, but simply just trying to time the market where you put the money in and then you take it out. You're like, all right, the money's losing. I'm going to put my money in cash. Okay, it's starting to grow again. I'm going to put my money back in the stocks. That you and I are going to miss some of those days. And if you miss just 30 days, over 240 months, over 20 years, then you will have lost $9,000. You would have invested $10,000 in 1996, and in 2016, you would have had just $1,000 left. You left your money invested all that time, and then you see the number just goes from there. You miss the best 40 days, 50 days, 60 days, you're just losing more and more and more of your money. And so I caution you, anyone who tells you a strategy about timing the market to where you put your money in, you take your money out, this is not the hokey pokey. You can't be putting 1 foot in and taking 1 foot out and put 1 foot in and shake it all about. That's just not how it ends up working. You will see, statistically speaking, that there is at least one recession every 10 years. You'll see that each time in the stock market that there's going to be a dip, and that you'll find that every time there's a dip, within 2 weeks is usually a pretty significant increase in that stock. And if you're trying to time the market, then you're going to miss most of the best days. And if you just miss the 30 best days, then you'll end up losing money. And so I tell you, it's not about timing the market, it's about time in the market. If you found value in this video, I do encourage you to go to yourfirststocks.com, where you can register for a free 5-day investing challenge where I will show you how to build your own portfolio, choose your own stocks, and put you on the path towards financial freedom so that you can spend more time doing things you love with the people that you love and supporting the causes that you believe in, so you can ultimately live your dream life.